The latest housing data shows prices have been flatlining for most of this year. Analysts say that interest rates are behind the market's soft landing, but they predict a return to more moderate growth in the second half of the new year.
32.5.
There's been no capital growth in the housing market since the March quarter.
Going. Sold. Congratulations.
In fact, the latest measure shows capital city prices went backwards in November by 0.2%.
It's a continuation of an easing back of house prices across Australia over the last, say, 9 months.
That easing back was the greatest in Perth, where house values slumped 3% between September and November. Hobart, Brisbane and Adelaide also lost value, but Sydney, Darwin, Melbourne and Canberra avoided the slide and made some headway. The market stalled a little earlier outside the capital cities, where home values are still below their January peak.
Anyone who has a perception that home prices are going through the roof, they've just got to look outside some of the capital cities.
Analysts are in no doubt about what's behind the softening trend in house prices.
It is interest rates which have seen home prices weaken.
But while higher interest rates are making homes less affordable, analysts aren't worried about prices collapsing.
Unemployment would need to soar and interest rates would need to soar, and both those factors aren't going to be happening over 2011. If anything, unemployment rate is probably going to tighten further. That's going to put greater demand for homes and put upward pressure on prices.
Overall in 2011 we'd expect house prices to rise modestly from maybe as low as 2 or 3% only in markets like Brisbane to maybe by the end of the year we might be looking at about 6 or 7% in the Sydney market.
So the crystal ball shows a stable, if not spectacular, future for house prices in 2011. Emma Renwick, ABC News.